Okay, so hello and welcome everyone to today's session. Now we will be doing another past exam question in today's session. So I've opened the practice platform and we will be starting this question. It's from March, June 2022, question number 1. Again, as usual, you might be familiar with this. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Number 1, PRYSOR's investment plan, investment appraisal details, and campaign for feed production. The information should be used to answer question requirements within your chosen response options. Okay, let's start reading. So PRYSOR company is a multinational company based in the country of Martech. Martech currency is M dollar. So PRYSOR is a multinational company based in Martech. Currency is Martech dollar. PRYSOR's board is considering establishing a subsidiary in the country of Iran, currency ED, to manufacture and sell a new model of mobile phones. Iran has free trade agreements in place with a number of countries, including Martech, and trades on World Trade Organization's terms with other countries. The basic information: PRYSOR based in Martech, currency is Martech dollar. PRYSOR's board is considering establishing a subsidiary in the country of Iran. They want to establish a subsidiary in some Iran. The currency is ED, and it wants to manufacture and sell a new model. Iran, in which you are going, the country in which you are going, it has free trade agreements with a number of countries, including Martech. They have free trade agreement with us as well, and they trade on World Trade Organization terms. So when you're planning an investment, there might be some investment appraisal details. So these are the investment appraisal details. So PRYSOR's board has specified a 4-year time horizon for the investment in Elan. PRYSOR's board has specified a 4-year time period. They're investing in Elan, 4-year time period. For the subsidiary may operate for longer. The board will also consider an offer for the subsidiary as a going concern. The board also wants an offer for the subsidiary as a going concern. Okay, expected sales units and revenue of the phone are the traditional investment appraisal type question that for year 1, 2, 3, 4, you are given sales units and the revenue is given in 80 because you are investing in Elan. I have told you about foreign investments that whenever you make a foreign investment, all inflows, outflows are in that currency. So when PRYSOR is investing in Elan, all inflows, outflows will be in Elanian Ds, whatever it is. The sales revenue figures have been calculated using the assumption that PRYSOR will charge a unit selling price of ED 160 in year 1 and increase the selling price by 5% per year in year 2 to 4. Okay, selling price into units, it's revenue. The new phone will require a component made in Martech and charge a transfer price of Martech in $7 per unit in year 1. C, the parts needed, import cost. So the new phone is being made in Elan. It requires a component made in Martech. So Martech will transfer it at a price of 7. So it's an income for Martech and cost for Elan, right? When Martech is selling component to Elan, it's a cost for Elan. The transfer price will increase by the annual rate of inflation in Martech each year in 2 to 4. So price will increase by the annual rate of inflation in 2 to 4. The parent company will achieve a pre-tax contribution of 35% on sales of the component in the subsidiary in Iran. So this is what was taught to you in foreign overseas appraisal. That when Martech is making a component and transferring it to Iran, it's a cost for Iran, but parent company will earn a contribution of 35%. Investment in a new phone is likely to mean the loss of future sales of an existing phone. If the new product is manufactured, the pre-tax contribution loss from the sale of existing phone will be expected to be M dollar, 400,000 in year 1, increasing the annual rate of inflation in each years 2 to 4. So when you are doing this project, there is a loss contribution opportunity cost, which is an outflow of $400,000. Other costs of the project are as follows. Other costs are year 1, 2, 3, 4. The investment in non-current assets will be ED 1,446,000. The realizable value of the non-current assets at the end of year 4 is expected to be ED 3,400,000, assuming the subsidiary is not sold as a going concern and assets are sold individually. Tax allowable depreciation in the first 3 years of the investment as follows. Now TAD is in the first 3 years as follows. So the TAD figures are also given for year 1, year 2, year 3. Okay, a balancing allowance of 2,701,000 EED can we assume to be available at the end of year 4 on the basis of the forecast net realizable value. So for year 4, there is a balancing allowance. So it's the difference between net book value and scrap, and you charge it for. Okay. PRYSOR will pay tax at an annual rate of 20% in Elan on its profits in the country. However, it will be exempt from any impact of taxation in Elan in the first 2 years of operating there. So PRYSOR pays tax 20% in Elan on its profits in that country. So 20% profits tax on Elan. However, PRYSOR doesn't have to pay any tax in the first 2 years of operating there. All post-tax cash flows will be remitted to PRYSOR and MarTech. Obviously, whenever you are making a foreign appraisal, you remit your cash flows. PRYSOR pays tax on profits at an annual rate of 30% in MarTech. So in MarTech, 30%, but in Elan, 20%. A bilateral treaty exists. That means you have to pay extra tax because you pay 20% there, and in MarTech, the tax rate is 30%. Bilateral treaty exists between Elan and MarTech. Under its terms, PRYSOR will be assumed to have paid tax at an annual rate of 20% in Elan in all 4 years. So in bilateral treaty, you will assume that tax is paid 20% in Elan in all 4 years. Okay. Tax in both countries is payable in the year in which the liability arises. That means there is no delay. PRYSOR is of the opinion that it has sufficient working capital and no further working capital will be needed. Predicted inflation rates are as follows. So you are given inflation rates for Elan and MarTech. This is usually for the finding of exchange rates. Okay. Current exchange rate is ED 2.6 equals to $1. So it's ED 2.6 per $1, discounted of 14%. And sensitivity analysis. PRYSOR's directors are particularly concerned with the sensitivity of the results of the investment appraisal if the initial selling price has to be lower to establish the fund in its markets. The directors are also wondering how long it will take for investment to continue value. PRYSOR's finance director suggested this should be measured by the investment's duration. Okay, so exhibit 2 is over now. And now it's exhibit 3. It's not that too much information, I believe, in this question. So, a recent improvement in Elan's economic position has been partly due to investment from foreign companies. The Campaign for Fair Production (CFFP), a global lobbying organization seeking better treatment of workers and local communities, has claimed that foreign companies currently investing in Elan have adopted a number of unethical practices there. So recent improvement in Elan's economic position has been partly due to investment from foreign companies. So Elan, the country in which you are investing, it has usually improved because of investment from foreign companies. The Campaign for Fair Production, a global lobbying organization seeking better treatment of workers, has claimed that foreign companies currently investing in Elan have adopted a number of unethical practices. There is a CFPP body. It states that Elan's companies investing in Elan have adopted unfair practices. The CFFP has called for all foreign investors in Elan to go beyond their legal responsibilities there and adopt CFP charter. The charter includes requirements to increase wages steadily, provide appropriate education for employees, keep adverse impacts on the local environment to a minimum, and prohibit the use of child labor. So charter wants increase in wages, provide appropriate education for employees, keep adverse impacts on the local environment to a minimum, prohibit the use of child labor. The charter also requires companies to disclose how they are meeting its requirements. The CFFP is likely to call for boycotts of companies which fail to agree to its charter and continue to follow unethical practices in Elan. So CFFP warns that if companies are not following them, they should be boycotted. PRYSOR's board will consider whether to agree to CFF charters as part of its appraisal of investing in Elan. As PRYSOR may also invest in production facilities in other countries in the longer term, the board will consider whether charter ought to be part of the framework for developing the company's future investment policies. PRYSOR has a good reputation and produces a published statement of corporate responsibility. PRYSOR is keen to maintain its reputation. Okay, this is some about charter. Okay, now we go to the requirements. Part A, Part B, 3 parts. Okay, so it's a 50 marks requirement. Explain the role of World Trade Organization and assess the implications for PRYSOR of the free trade agreement between Elan and MarTech in the context of World Trade Organization's requirements. Then prepare a report for directors of board of directors of PRYSOR, which evaluates the financial acceptability of investment in Iran, discusses the assumptions made with respect to calculations, calculate the investment's duration and percentage change in selling price to have a zero NPV. Significance and concerns with the calculations, professional marks for style. This is for professional marks because it's an old requirement. Now it has become to 20. And there's 6 marks on this charter requirement. Okay, so we will solve each and every requirement step by step. Okay. Okay, so the first requirement that explain the role of World Trade Organization and assess the implications for PRYSOR of the free trade agreement between Iran and Martech in the context of World Trade requirements. It's the 4-mark requirement, not too long, but there are 2 parts of this question. Number 1, explain the role of WTO. This has been discussed with you in the class. And assess the implications for PRYSOR of the free trade agreement between Iran and Martech. What are the implications of this free trade agreement? Okay. So you just write 2-3 points on the role of WTO and 2-3 points on the implications of free trade agreement between Iran and Martech. That would make it. Okay. So this was related to this first exhibit. PRYSOR is a multinational company based in Martech. Okay. PRYSOR board is considering establishing subsidiary in Iran. Iran has free trade agreement with number of countries, including Martech. Okay, so what is the role of WTO? I have taught you mainly in Elan way question that World Trade Organization was formed as a body to promote trade, okay, and promote free trade in the world. Countries should promote free trade with each other, like reduce import tariffs with each other, reduce taxation on each other, and offer one product to other at reduced duties, taxes, reciprocal. The other should also operate at reduced products and tariffs so that the trade goes on between countries, and eventually when there are less duties and taxes, the customer gets the product at lower price. This is what primarily the purpose of World Trade Organization is, to promote free trade by reducing import duties, tariffs, etc., etc. Okay, now what will be the implications for PRYSOR of the free trade agreement between Iran and Martech? Now, PRYSOR is based in Martech, and Martech has a free trade agreement with Iran. So the implications of this free trade agreement for PRYSOR company will definitely be good. Right? How? Because PRYSOR is based in Martech. Okay, PRYSOR is based in Martech, and Martech has a free trade agreement with Iran in which it is investing. So the goods can flow from Martech to Iran. The parts can flow, the goods can flow at World Trade Agreement, World Trade Organization preferential terms. Reduced duties, reduced taxes, there will be no barriers to trade. And eventually, this will prove to be a cost-effective measure for PRYSOR. Consider that PRYSOR doesn't have a free trade agreement. PRYSOR company is investing in Iran, and Iran doesn't have a free trade agreement. It will be very difficult for PRYSOR to send goods or parts and take goods and parts from that country. The rates won't be preferential, so cost will be higher. Cost will be higher means NPV would be lower. But here the case is clearly that they have a free trade agreement. So when there is a free trade agreement, you can easily transfer goods from one place to another, and this will result in significant cost savings, which will result in positive NPV for you. So if you write the role of WTO, promote trade, barriers to remove, reduce duties and taxes, you get 2 marks. And then the impact is positive, you write this, you get 2 marks. So that is perfectly all right. Okay. So if you want to write these points, you can write these points. Then we will go to the further requirements. Okay, now requirement 2 states that prepare a report for board of directors which evaluates the financial acceptability of investment in land, discusses the assumptions made with respect to calculation, calculate the investment's duration, percentage in selling price, and discusses the significance with calculations B and 3 above. Okay, so we have to make a report and gain professional marks as well. So you can use either word processor or spreadsheet. So if we go towards a spreadsheet, the report is having tabs like to, from, date, subject, and introduction, the main thing. Okay, so it's to usually addressed to board of directors because the report must be addressed to board of directors. Okay, from, it's not mentioned, so you can just leave it as I told you. Date, you don't need to mention the date. And subject may be towards Elan investment. Okay. And in introduction, you know, what did I teach you to write? This report. And then we write all requirements. You can copy paste. It then you can copy paste the second requirement. Discusses the assumptions made with respects to calculation above. It then, if there's any further requirement, calculates duration and performs sensitivity analysis. Calculates duration and performs sensitivity analysis. It finally discusses the significance of and concerns with calculations above. So this is how you put forward the introduction. Okay. And once this introduction is done, then we told you that every requirement must have heading. Okay. And if it's a calculation requirement, you write it in the appendix. If it's a theory, you start writing there. Okay. So if you want to copy, you can copy, and then I will resume further. Okay, so once you have written this to, from, date, subject, and introduction, then I told you that every requirement must have separate headings in the report. Either you are gaining 4 marks or 20 marks, you have to follow that, okay? Requirement 1 is, I will copy paste. Evaluation of financial acceptability. Okay. Requirement 2 is assumptions made. Okay. Then requirement 3 is duration and sensitivity analysis, and requirement 4 is significance and concerns. Duration and sensitivity analysis. And requirement 4 is okay. So these are the 4 requirements. So I have 2 unprofessional marks. That's why I'm following everything. That 2 from date subject introduction. Then there are introduction has requirements. Then there are report has 4 requirements. I made the heading of each. And I told you in the classes when you studied from me that if the requirements are computation, we refer to appendix. And if they are discussion, we write it there. So evaluation of financial acceptability, we all know financial acceptability is done by NPV. So this is a calculation requirement. I will not perform here. I will go in the appendix. Assumptions, I will write here because it's a discussion. Duration and sensitivity is again a calculation. I will refer to appendix, and significance and concerns. They are again discussion. I will write it here. Okay. So first, evaluation of financial acceptability. Appendix 1 shows financial acceptability via NPV. NPV is found to be whatever is the answer. Okay, so let's just move now towards NPV thing. We will mention NPV in appendix 1. If you want to write these components which I wrote above in Word, you are most welcome. There is no hard and fast rule. Okay, if you want to use on appendix Excel, it's your choice. Okay, now as far as NPV is concerned, I have told you regarding NPV, the first step is capital allowance schedule. Okay, now if we talk about a capital allowance schedule, since you have finished all my classes, there are 2 approaches of capital allowance schedule. Okay, the first approach is that you make columns here, capital allowance and tax savings at whatever the tax rate is. $20. Okay, so you just write the capital allowances. That is a 4-year project, so you write 1, 2, 3, 4. You write capital allowances, direct tax allowable, depreciation. I think that's given in the question. So it's 3615 ED for the first year, 2711 for the second year, 2033, and 2701. Okay. See, 3615 2711 2033 2701. And you take tax benefit at 20%, T45 star x 0.2. And this last column is important. Whatever savings are coming, you record it as inflow. Remember, one thing is this, okay, you can use that, okay? And the second approach, which I've taught in the webinars and in revision classes as well, you don't make a capital in a schedule. From directly NPV, you deduct TAD, tax allowable depreciation on profits, so that the profits get reduced and the tax get reduced, and then you add back TAD. Okay, both approaches are acceptable, whatever you want to follow. In classes, I have taught the capital allowance schedule approach. In my webinar classes, I have taught the TAD approach. Both are acceptable. Okay. The second thing which you all must do is exchange rates. Now, as far as the exchange rates are concerned, if you go in investment appraisal details, current exchange rate, that's zero. It's given ED 2.6 equals to $1. So it's ED per dollar, because one always comes in denominator. So it's ED per $1. ED per M dollar, because one always comes in denominator. The current rates are given 0, 1, 2, 3, 4. If rates of all 4 years are given, you would have written that, but in this question, only the current zero rate is given, and you're provided with inflation rates. Obviously, it's ED per dollar, so E will come in numerator, Elance, and Matic will come in denominator. Okay, so it's 6% and 10%. I wrote 2.6, then 2.6 into 1.06 divided by, what is the other one? Through the purchasing power parity theory, 1.1. 2.5045. Okay. Then I told you that you take this as spot, that is J44 into 1.04 over 09. Okay, 2.39. Then you take this as spot K44 into 1.03 or 1.08. Okay, 2.279. And then you take it as spot L44 into 1.03 over 1.07. Okay, so you get the second step, you get the exchange rates. Okay, you can note this, then I will move forward. If you don't want to make a capital on schedule, it's your choice. You can use the TAD approach as well. Okay, now once you are done with this, now you go for NPV, and you know our NPV format, 2, 3, 4. Okay. Investment. So since your investment in is Elan, so all inflows, outflows will be in Elan, ED. So what is the investment here? It's 14460 negative. Okay. Then you get revenues. So I think revenues were also given in the question. Units, price, both are given. So we will directly take the revenue figures that's given, 8,10920. Use the copy paste feature. All things are in ED, remember. Okay. Then after revenue, we have other costs. They're also in ED, I think. Three five zero eight four nine three four six two three zero and 6685. So it's 3508 negative. Then it's negative 4934. 6230. 6685. Then remember, there was a new phone will require a component made in Martech and charge a transfer price of 7 per unit in year one, and it will be by the annual rate of inflation. So the annual rate of inflation was 5% per year. Or it was selling price. Annual rate of inflation in Elan was 6, 4, 3, and 3. Okay, the transfer price will be 7 per unit in year one, and transfer price will increase by annual rate of inflation in Martech. So the annual rate of inflation in Martech is 987, because for year one it's given. For year 2, 3, 4, it's 987. So I think we have to work around the component cost here. Okay, so for component cost, you can mention it as working one, so that I can do it here. Just to show on the screen, I am doing it here. It's better for professional marks. You should do it at the end. So 1, 2, 3, 4. Component cost is M dollar, 7, increasing by the rate of inflation. So 7 into 1.09. Then it's 8%, 7.63 into 1.08. And then it's 7%, 8.24, 7%. This is what you get the component cost. And you multiply it with units. So the revenue you took was in thousands. The other cost was also in 80,000. So the unit should also be in 1,000. 50, 65, 83, 90. 50, 65, 83, 90. Okay. Cost per unit into units gives you cost in M dollar, because that was given in M dollar. So I will do J49 to J50. This is cost in dollars, right? Now, the thing is that you cannot put it here in dollars. You need in ED. So cost in ED. Where are you now? You are in Iran. So the local currency is ED. And it's coming in numerator. So it seems to be a direct quote. And when there is a direct quote, you will multiply, right? Once you multiply J51 by J52, okay, this is what you get. And I think if we restrict it to 2 decimal places, okay, so this is the component cost, which is supposed to be an outflow. So I will write negative J53, negative K53, negative L53, negative M53. Okay. Then if you want to use the TAD approach, you need to deduct tax allowable depreciation. And if you want to follow the tax savings from capital losses approach, you just need to keep it here, taxable profit, then tax, then scrap value, and then just enter tax savings. So if to make it familiar with the examiner answer, we do the TAD approach. So what was the tax allowable depreciation? It was negative 3615, negative 2711, negative 2033, and then negative 2701. Okay, this gives you taxable profit. Double 460, but there was no profit. And here it says you can just sum them. Okay, on that you have to pay tax in Elan at 20%. So no profits, no tax. Again, the tax is 0 in year one. In year two, it will come, but still 0 because remember, 2-year exemption. Then E56 into 20%, 50 negative, and then into 20%, 1108. Now, after tax, you add back TAD. Because you deducted depreciation, which would not be a part of NPV calculation, 3615, 2711, 2033, 2701. If you're using the capital allowances approach, you don't have to do this, right? Because you don't do TAD reduction and addition, you just add back tax savings here. But if you have deducted depreciation, you need to add back. Okay. Now, after TAD comes working capital, so it clearly stated there is no working capital. Sufficient working capital, then scrap value. So realizable value of non-current assets is 3,480. So scrap is 3,400. Okay. After that, there is nothing. You need to add them to get net cash flows in ED. Okay. So it's negative 14460. 3615, 4800, 5888, 10535. Okay. Even if answers are slightly changing because of capital allowance approach, no need to worry. Okay. These net cash flows are in ED. You need to obviously not put it here. You need to remit them back to your home country so that you get net cash flows in M dollar. That is the remitted cash flows. And for that, you would be needing exchange rate. Okay, so I will just copy paste the exchange rates here. And for the first one was 2.6. Now, where are you now? We are in Marteg now, because at the time of investment, you were in Elan, but remittance, you are in Marteg. So in Marteg, obviously, it's in denominator, it's an indirect code, so we need to divide it. Okay, so we will divide B60 by B61. It's 5561, and we will drag it. Okay. You can copy tail here. Okay, now once you get your money in Matig, if there are any other cash inflow that was in Matig, you need to deal with that. This is the same question which we taught in the classes like Ilanwe. Like there is additional tax, 4 items, remember? Uh, After tax contribution on that imports, okay? Lost contribution after tax. Okay, because if you send a part to someone, it's a cost for them, but you want income on that. Now, firstly, additional tax working to after tax contribution working 3. Okay. Talking about additional tax, very easy. So what were the taxable profits in ED? Okay, these were the taxable profits ED. Okay. So for taxable profits in M dollar, you need again exchange rates because there you paid 20% and now it's 30%. So since you're in Matic at the moment, so it's in denominator, so in direct quote, you will divide it I-62 divided by I-63. So this drags on and you put tax 10%. So it's I-64 10%, drag it. Okay. So 0, negative J 65, negative K 65, negative L 65. Okay, so these are the figures for additional tax. After tax contribution. So you sold them for, I think, 7 into 50, right? So 350. That was in dollars, right? So J51, K51, L51, M51, JKLM 51. Okay. And now you want contribution on of 35% on that, but you need to take it after tax. JKLM 51. So what you can do is, to save time, you can take J51, but I earn contribution of 35%. This is my contribution because this is my income, but I have to take it after tax. That means 70% because 30% will be taken by taxation authorities. So this comes to 86. Then K51, that's the amount you send to them. You want 35% on that, but you will get only 70%. Okay. L51 into 35% contribution, and you got it after tax. So 167. M51 into 35% after tax. Okay. Lost contribution after tax. So lost contribution, I think, was given. $400 in year one, and then market rate of inflation 987. So lost contribution. Four hundred into 1.09, 436 into 1.08, and 471 into 1.07. This is lost contribution. Just take it after tax. It should be negative. So it's I68. Okay. J 65. No, 67. 68. Negative. Then K68. L68. Okay. After this loss contribution after tax, everything is over. So I will just net them off. Get net cash flows finally in $. So for that, I will simply sum all of these from 1442 to C62. Okay. This comes as it is. Okay, now since professional marks are now 20, so if you do this like this, net cash flows multiply by a discount factor of 14%, write down the factor, then multiply to get present value and then NPV. I think you would be losing some professional marks because now for professional marks, it's better to use the NPV function. So let's just find NPV as the function. As told you in the professional skills class, it's NPV in the video of mastering the art of professional skills. Okay, it's NPV bracket open, the discount rate, that's 14%, comma, sales of net cash flows. Okay, positive net cash flows from year one. That's C66 to F66 bracket close and plus the investment cell, that's B66. Okay, you get the NPV 960, and you can check it via the separate thing. You will get the same NPV. Okay, so we have completed approximately 21 marks of the question till here, 4 and 17. You can copy. If you have any queries, you can ask me. Okay. Okay, so I hope that the requirement A of this question was comprehensively understood by all of you. Role of World Trade Organization, and then the requirement B1, evaluation of acceptability, we evaluated through NPV. We had to prepare a report, so now we should go back to this spreadsheet. Financial acceptability evaluated via NPV, we made a report. So we told you report has two from date, subject, introduction, and every requirement must have headings. And I told you if it's a calculation requirement, refer to appendix, but if it's a discussion, right there. So evaluation of financial acceptability was requirement 1. Appendix 1 shows financial acceptability via NPV. NPV is found to be 960 positive, which suggests project is financially acceptable. Okay. Now to earn more professional marks, you just have a questioning mind, analytical mind. Okay. So you can write questioning mind. However, the company must also consider some non-financial factors before making a final decision. So this is something you just created a questioning mind. Okay. Skepticism, as I told you. Okay. Now, the requirement B2 was 5 marks, discusses the assumptions made with respect to calculation. Now, I told you that assumptions are usually present in the question. Copy paste that. Okay. And if they are short of 5 marks, 5 points, you can add some of their own. Okay. So let's go back to the question. Whatever assumptions are there, we'll copy. First paragraph, I didn't see any assumption as of now. Okay. The sales revenue figures have been calculated using the assumption that PRYSOR will charge a unit selling price of 116 year one and increase that selling price by 5% per year in year 2 to 4. Okay, so I got this assumption. So sales revenue figures have been calculated using the assumption that PRYSOR will charge a unit selling price of ED 116 in 1 year increased by 5%. The basis of this assumption, what basis this assumption made, it's not clear. Okay, so mention one assumption. There will be definitely some more. The new phone will require a component, transfer price, parent company contribution. See here. The realizable value of the non-current assets at the end of year 4 is expected to be 34,000, assuming subsidiary is not sold as a going concern. In reality, situation may occur where the subsidiary has to be sold as going concern, or you can write what will happen to NRV if it is sold as going concern is unclear. Okay. This is also an assumption. Balancing allowance of 37,000 can be assumed. We can write this as well. Let's see if there are some others as well. It has sufficient working capital. This can also be made as an assumption. No further working capital is needed. Inflation rates are given. That means exchange rates are calculated using purchasing power parity theory. I mentioned this as well. They are only mentioning a 4-year time horizon. This is also an assumption. So you can write many assumptions in the question. They are assuming no further working capital injection, whereas as project moves forward, working capital may be required, thereby affecting NPV. Okay. Exchange rates are assumed to base on inflation rates. Why they are not based on interest rates? Skepticism again. Okay. The time horizon is assumed as or whereas project is going beyond 4 years. So why not full time period is being considered? Okay, so five assumptions are there, and still you can make further. Okay, if you want, you can copy them, please. Mm. Okay, now we should go to the further part of the question. We have already solved 26 marks. Now there are approximately 6 and 6, 12 and 6, 18 and to 20 marks remaining. And then after that, we will be doing the professional marks. Obviously, we're running side by side. So now the investment's duration and percentage in selling price required to investment for having a zero revenue based on sales revenue. Okay, so 2 marks are for the duration and 6 marks, I think, are for the percentage change in selling price required to have a zero NPV. Okay, so let's start. Now, since it's a calculation requirement, so I will refer to an appendix. Appendix 2 shows duration, which is whatever will come, and sensitivity, or we can write percentage change in selling price for investment have a zero PV. Which is let's move to appendix 2. Now, firstly, okay, now if we are about to find a duration here, so for duration, if you remember, that I taught you that duration has 3 steps. Present value of return phase. Now, how will you get the present value of return phase? Just have to find the present values. So at 14% discount factor, I will just input the discount factors. Here's 0 is 1, 0 0.877, 0 0.769, 0 0.675, 0 0.592. Net cash flows into discount factor will give present values. We didn't need it to calculate it before because we used the NPV function. So it's B66 into B67. And we just drag them. Okay. Now, if you want to find the present value of return phase, you can just add them all. That present value of return phase is going to be the sum of C68 to F68. Okay. Then I told you to find weighted average present value. Now, weighted average present value, if you remember, it was 1095 present value, C68 into the year 1 plus present value of year 2, D68 into 2, E68, year 3 present value into 3, F68. Okay, this is the weighted average present value. And then for duration, divide 2 by 1. Okay, you divide 2 by 1, that is B78 by B77, 2.85 years. This is the duration as taught. Is there any commentary asked? Let me just confirm. Calculate the duration. Okay, so I don't think there is any discussion. Now, people might sometimes say that we read the examiner answers and there is some explanation mentioned, but that's not a requirement. So calculate the duration, 2 marks. I think you have done enough. Okay, and now the percentage change in selling price for 0 NPV. That's purely a part of sensitivity analysis. That sensitivity analysis on revenue. Now, if you remember sensitivity analysis on revenue, it was taught as NPV divided by present value of sales, right? So for this, you will be needing the NPV and you would be needing present value of sales. If it's variable cost sensitivity, NPV or present value of variable cost. If it's fixed cost, NPV or present value of fixed cost. If it's volume, NPV or present value of contribution. So this is what was taught. Okay, NPV or present value of sale. Now NPV is in B70. Okay. Now present value of sales is simply sales multiplied by discount factor. Okay, so I just need to check which cells the sales are in. C52, D52, E52, and F52. C, D, E, F. Okay. Multiply by discount factor. So C52 revenue into discount factor gives present value of sales, C67. D52 into D67 year 3, E52 into E67, F52, F67. This is the present value of sales. Okay. And then you divide it. Okay, it's 2.7%. Okay. But if you do like this, okay, and you say that I did correctly, and many students say that I used your formula, the NPV and the present value of sales, and when I looked at the answer, it was different. Now, understand the point that you're making a big mistake. Okay, we have told you the correct formula in the classes, that NPV over present value of sales, but you have to apply your mind properly before going to any of these particular things. Okay. Now, if you are doing NPV or present value of sales, you must realize the fact that NPV is in M dollar, right? The sales are in ED. How can you make this comparison, right? It should be in same currency, okay, at least. So this present value of sales has to be converted into M dollar as well, which I will do here. Okay, so the sales were C52, D52, E52, F52. These were the sales. Okay, and were exchange rates. Sales, ED, and exchange rates. You are in M dollar at the moment because you are calculating sensitivity analysis. You are in country of where currency is Matak. So you will be definitely needing to divide it. Sales in M dollar. So sales in M dollar will be I-78 divided by I-79. And you drag it. Okay. Now, if you want to have present value of sales correctly, the sales in M dollar needs to be taken, which is in I-80 into discount factor. Okay. Then for year 2, not the old one, J80, J80, L80. This gives you present value of sales correctly, and NPV or present value of sales is 6.3%. This working is before tax because the requirement stated me that based on revenue. Okay, it didn't tell me revenue after tax, but there are many questions where examiner uses after tax, and there are many questions that uses before tax. So both approaches are acceptable. Okay, if you want to just do it after tax, there is no problem. If you want to take revenue after tax, you just have to take this revenue and do it after tax. Okay, whatever is the 20% tax rate, 10% tax rate, 30%, you will get the answer. I think the examiner answer is 8%. Okay, so this is the duration and sensitivity analysis. If you want to do after tax, just do it after tax, the revenue less tax. Okay, Please note it down and then I will proceed further.
ये अपने इसी से कोई कोई बोलते एक लड़का है रुमान मलिक। तो ये सबको है ना वो कर रहा है।
Okay, now our 12 marks requirement is left. Requirement 4 discusses the significance of and concerns with the calculations in B3 above. So remember in B3 what we have done. In B3 you have found duration and sensitivity analysis. So it is asking significance of and concerns with calculations in B3. That what is the significance of calculation in B3? That means significance of duration and sensitivity and concerns with duration and sensitivity. Okay. People say, okay, very difficult requirement stuff. I think it's a very easy requirement. You just have to mention the advantages, significance, and concerns, disadvantages of calculations, duration, and this sensitivity. So importance, that is advantages, and drawbacks, concerns, disadvantages of duration, not just book ones, but relating to the scenario, and the drawbacks. So firstly, I will talk about duration. Now, I won't write this complete answer. Okay, I will just explain and you can write the points on your own. Okay, now significance of and concerns of duration. Okay, three points for both will secure me 6 marks. Duration is 2.86 years, which implies that the average time to recover the investment is 2.86 years. Okay, what is the significance of this duration? Significance is that company knows that it's a 4-year project, but their money would be recovered in 2.86 years. That means they would be break even in 2.86 years. After that, even if the project doesn't go according to estimate, you still have your initial money back. You won't suffer loss. That's the main point of duration and payback. That if the payback period is 2 years, it has significance, 2.8 years, and duration 2.8 years, that we will get our money in 2.8 years. We don't have to wait for initial capital till 4 years. We will get our money back in 2.8 years, and the other years is profit year. But there is a concern with duration, drawback, concern with duration. Okay. Duration always creates a bias towards short-term projects, right? Because the rule is that the lesser the payback and duration, the more better the project is. We opt the one having lowest payback. So in duration, there is a bias towards short-term projects. We only go towards projects having a shorter duration and ignore the larger picture that what cash flows we are generating. There is a second concern as well, that duration meaning is difficult to understand. Many people, when I teach this in class, they say what we are trying to do. Present value, then step 2, weighted average present value. What does this weighted average present value is? I did this, but didn't come up in my mind. What is this? I said, okay, just do it because teacher is telling, and then divide 2 by 1. It's a drawback. Payback meaning is clearly understood, but duration, the average time meaning is not clearly understood. You can go and check the text. This is a drawback written. Okay. And even in the examiner answer, you can read this is a drawback written. Like you never understood the rationale behind IRR. That's what we are trying to do. 1 NPV, then you make negative by increasing rate, positive by decreasing rate, and blah, blah, blah. So there are some things which you just have to do, but it's difficult to understand. So duration significance is it tells the time period of recovery, which ensures company knows that by when we will be avoiding loss. But the concern, it creates a bias towards short-term projects, and another concern, its meaning is difficult. So 3 points of duration are enough. Okay, sensitivity. Significance of sensitivity. Company knows that sensitivity is 6.3%. That means selling price can change only by 6.3%. Beyond 6.3%, if you change, you lose. Okay. If sensitivity is 6.3%, that means company has one thing in mind, that you can change selling price only by 6%. Beyond 6.3%, you would be in loss. If company doesn't know about sensitivity, it may change selling price by 10% or 20% to boost sales, but in reality, they will end up in loss. So knowing sensitivity at 6.3% ensures that we know that till 6.3% we can go. Beyond 6.3% we should not go. Okay, but the concern of sensitivity, it can only consider variables in isolation. Okay, at a time, multiple variables can change, but sensitivity cannot handle that. It only considers each variable in isolation. Okay, and knowing things in advance makes you risk averse. That if you know things in advance that okay, 6.1% is the maximum limit, you cannot play aggressively. Okay, so 1 significance of sensitivity, 2 concerns mentioned, 1 significance of duration, 2 concerns mentioned. This is 3.6 marks for enough. Okay. Now the report part is over. Now there is part C, discuss the factors that may determine the extent to which PRYSOR adopts the campaign for fair production charter in developing its framework. Now, this was related to this particular part. That recent improvements in Elan's economic position has been partly due to investment from foreign companies. The Campaign for Fair Production, a global lobbying organization seeking better treatment of workers and local communities, has claimed that foreign companies currently investing in Elan have adopted a number of unethical practices here. CFFP has called for all foreign investors to go beyond their legal responsibilities, adopt charter. Charter includes increase wages steadily, provide appropriate education for employees, keep adverse impacts on local environment minimum, and prohibit child labor. Charter also requires companies to disclose how they are meeting its requirements. CFFP is likely to call for boycotts of companies. PRYSOR's board will consider whether to agree to CFF charter as part of its appraisal, as PRYSOR may also invest in production facilities in other countries in the longer term. Board will consider whether charter ought to be part of framework for future. PRYSOR has a good reputation, produces number of published statements of corporate responsibility. PRYSOR is keen to maintain its reputation. Now there is a global charter in this country, and discuss the factors that may determine the extent to which PRYSOR adopts campaign for fair production charter. Now, you cannot find this requirement in study text or any previous past paper. Many students say that there was a 5-6 mark requirement. We didn't understand that. You have to open your mind. These are professional papers. 5-6 marks. You have to think out of the box and give the answer. This requirement is only from this particular question. Nowhere in the study text, nowhere in technical articles. Okay. Factors that may determine the extent to which PRYSOR adopts campaign for fair production charter. What factors may determine the extent to which I adopt this charter? Before adopting anything, the principal factor is cost-benefit analysis. Principal factor is cost-benefit analysis. Applying this charter means, and you will get benefit, obviously. You are providing education for employees, which may create future good prospects. You are not using child labor, good image. Okay, you are getting benefit, but it has a cost. Providing education for employees creates cost. Okay, reducing child labor means you have to use normal labor. That creates cost. What was the third one? Increase wages steadily. Increase wages steadily means you have to increase wages. That's a cost. So your NPV may go down. So the factor that may determine whether you adopt this charter or not, one factor is cost-benefit analysis. That you will incur some cost, wages increase, reducing child labor, providing education, and you will get benefit as well. So you need to consider cost-benefit analysis, first factor that will determine whether you should adopt this charter or not. Reputation. You are keen to maintain your reputation. So if you don't follow this charter, obviously people will consider you as a bad company. Your reputation will go down. So reputation may also be a factor which will decide whether you opt for this charter or not. Okay. Self-satisfaction. Self-satisfaction can be a factor in deciding whether you adopt this charter or not, because even if you don't adopt this charter, you may not be fully satisfied that you are going good for the global community. Okay. Fear of boycott. You are going in a new country and people boycott you. So definitely your sales would be lost. Your investment would not be financially viable. So fear of boycott may also be a factor which will decide whether you adopt this charter or not. Just elaborate these points and you get marks. Okay. So for this, I will suggest you to read examiner answer. Anyways, we have completed this full 50-mark question. Okay. We will meet in the further classes. Take care.